Hey everyone, welcome to your anti-money laundering channel. Has your bank account been frozen, killing your crypto or fintech startups' cash flow? Solve this with strategies to stop de-risking in its tracks. Let's dive into the pain and why you need to act now to save your business. Listen, if you're building something in crypto or fintech, there's one thing that can kill your dream faster than anything else: your bank shutting you down out of the blue. We're going to talk about how to stop that from happening. This is your survival guide. Seriously, this is the stuff of nightmares for founders, right? You're finally getting traction, things are moving, you're building, and then one email, just one, can bring the whole thing to a grinding halt. Could your entire fintech dream really be shut down overnight? Let's get into it. And this is pretty much exactly how it plays out. It's not a long, drawn-out process. It's just bam, you get the super vague email, something about AML concerns, anti-money laundering. And just like that, your company's lifeline, your bank account, is gone. It's sudden, it's brutal, and believe me, it happens way more than you think. And look, this isn't some made-up scenario. $50,000, that's a real number. That's how much one client had just stuck, frozen in limbo in the middle of transactions. Can you even imagine 50 grand of your capital just gone while your payroll, your server bills, they all keep coming? This is the reality we're dealing with. Okay, so you have to ask why. Why does this keep happening? Well, I can tell you it's not random, and honestly, it's not even personal. There's a very specific logic behind why banks pull the plug. And if you can't understand that, you're already halfway to stopping it. The fallout is catastrophic. Your cash flow instantly goes to zero. Poof, gone. You can't pay your employees. You can't pay your vendors. This isn't some small hiccup. It's a full-on business-ending crisis. Suddenly, contracts are falling through, your reputation takes a massive hit, and your users start leaving. We saw one company lose half their user base trying to claw their way back from this. There's actually a clinical-sounding term for this in the industry. It's called de-risking. And what that really means is that to the bank, you're not a partner. You're just a line item on some compliance officer's risk spreadsheet. And frankly, it's a lot easier for them to just hit delete on that row to get rid of you than to actually do the work of managing whatever risk they think you represent. So let's get inside the bank's head for a second. Think about their calculation. On one side of the scale, they've got your business, your revenue. On the other side, the threat of massive, crippling fines from global regulators like the FATF. So, when they weigh your account against the potential multi-million-dollar penalty, especially with all the transaction volume in crypto, well, the choice becomes pretty simple for them, doesn't it? All right, that's enough doom and gloom. Let's pivot to the solution because there's one, and it starts with you. It starts from the inside. You've got to build what I call an internal compliance fortress, something so solid, so buttoned up that when the bank looks at you, they don't see risk. They see a perfect model client. How do you build this fortress? Well, it's got four main pillars. First, you need rock solid KYC and AML systems. That's know your customer and anti-money laundering. Second, you have to keep incredibly detailed records of every single transaction. Third, your compliance rules can't just sit on a shelf. They need to be living documents that you update all the time. And finally, number 4, you've got to audit yourself. Find your own problems before anyone else does. The good news is you're not alone in this. You don't have to invent all of this stuff yourself. There are amazing tools out there. You can use automated KYC platforms. You can use blockchain analytic tools to really understand your fund flows. And yes, you must do your homework. You need to know the key regulations inside and out, like the FATF's travel rule. It's non-negotiable. So building that internal fortress is half the battle, but it's only half. The other piece of the puzzle is external. It's about how you manage your relationship with your bank. You have to go from being a potential problem in their eyes to being a trusted partner. And how do you pull that off? For starters, pick the right bank. Find one that's actually crypto friendly. Then it's all about being proactive. Over communicate. Don't wait for them to come asking for reports. Send them regular updates, yet on their calendar. Walk them through your business. Be an open book. Consistently show them that what you're doing internally is exactly what they need to feel safe. And these banks do exist. You know, you can look for the ones that actually specialize in crypto or even some of the more progressive, fintech-friendly neobanks. The key is they've already decided to be in this space. They've done the work, so they're much less likely to get spooked and pull the plug on a good client, which is you. So let's bring all this home. The goal here isn't just to figure out how to survive a bank freeze. The real goal is to build your company in such a way, so transparent, so resilient, that a freeze isn't even on the table. It never even becomes a conversation. And that's what this guide is all about. So if you remember nothing else from what we just covered, remember this one. Your proactive compliance, that's your shield. 2, transparency. That's how you turn your bank from an adversary into an ally. And 3, and this is the most important part, you're not powerless here. You absolutely have the power to protect your business. Look, what you're doing is important. You're building the future. You've already jumped through so many hoops to get this far. Don't let something as preventable as a banking issue be the thing that destroys your crypto dream. Now you have the playbook, the strategies right here. The tools exist. The path is clear. The only question left is, what are you going to do about it? Are you ready to build that fortress and protect your dream? Don't let de-risking destroy your crypto dream. Subscribe for more AML tips. Thank you for joining us. Until the next video.